energy,
What's up?
energy, 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 energy,
What's up?
energy, 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 energy,
What's up?
energy, 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 energy,
What's up?
energy, energy.
Yo, what's up, guys? It's Mr. Sombonyo here, you know. This is just after FOMC. So, yeah, we're back on the charts. And today, I'm recording in a new environment, which is the kitchen, which is something new for me. Like, I'm trying to stay up and actually work. Like, I want to work hard on this YouTube channel, guys. Don't forget to like, share, and subscribe. But anyway, let's get to business. So, right here, what you can see was yesterday's analysis practically. What I mean by yesterday's analysis is these two fair value gaps was what I was looking at for yesterday to see how it will perform in this area as it broke the high, the low, and created a London low. Then obviously it bought up until there. So yeah, but practically, guys, in this video we're gonna be focused on order blocks using MMSS. By MMSS meaning market maker structure shift. That's what we're basically focusing on. Like it all has to do with order blocks this time, because last time was fair value gaps, this time is order blocks. So I got my coffee with me. I'm sure in the background you can hear the fridge and all that, but yeah, guys, please bear with me. I'm trying to make sure that, okay, I get out the content, like the best type of content, when I know that I'm my most productive, and I'm literally productive at these times of the day. But okay, let's get to business. So, this guy's here, right here. This is price right now, alright? You see this green candle over here? That's an order block. Literally. Because it changed price here. It acted like it was going up as a green candle, and the candles after that were sells. Like they were red. So this candle acts as an order block. And if you look at it, I'm going to mark it with this. I'm going to mark the whole candle with this. And I'm just going to change its color and make it like a red or something. So with this being red, yeah, perfect. You see the red area, you see how we touched it, we bounced off an order block, literally. And since, guys, this, you see how roughly and aggressively we bounced off this order block right here. Since this happened, you know that we're respecting this order block, and we might go down and break these lows. These lows would be the target with this. So this green candle alone is an order block, right? So there may be situations where there are 3 green candles or 2 red candles, like here for example. You see this, look at this. These 2 red candles are one order block. They act as one order block. So in this situation, it's this. Look, here's the high of this order block. Look where the market turned. You see, I'm sure it turned on the body, right on the body of this candle. You see these 2 candles right here? Let's mark them with red too, so you understand what I'm speaking about, and you can see what I'm actually speaking about. Right there, as you can see. You know what, let me do this. I don't mind restarting everything and removing everything, it's okay. So the red blocks are gonna be our order blocks, right? This is the order block right here, the whole order block. And the mean threshold of our order block is the 50% mark. So here's this Fibonacci retracement. Let's get the 50% mark of this area. The 50% mark of this area is right here. Wait a minute, is it? Did I just market the wrong area? I think I did. Okay, there's the 50% mark. So what this has to do with everything is that, okay, so guys, now you see the way the market turned. It respected the order block here. It bounced off the order block and went up. As you can see, price went up. This was FOMC right here, right? Which time zone am I in right now? Because I'm seeing the say 5. Oh, FOMC was here. Oh yeah, I'm wrong. This here, yeah, this here. When this came down, it respected the order block. Even though we have a fair value gap here, we are not going to focus on the fair value gap, because here's an order block here, this red block. The 50% mark, sorry for that, that's my chair. The 50% mark of this order block, if a candle, listen to this carefully, if one of these candles had come down here and closed below this line, this 50% mark I marked, closed below, it means we have violated the order block. I repeat again, if it had happened that we close below this line right here and close somewhere here, the candle closes, not that it passes with a wick and leaves a wick and closes right somewhere above here. That means we respected it because we closed above the 50% mark, the mean threshold. That's the most important part of an order block. That's what you need to understand. Because if you don't understand that, you're going to take order block trades thinking it's valid, but it's invalid. So, also here, I'm going to mark it in red. The green candle is the order block here. Why is it an order block? Because price came down here, right? At this green candle, it took a breather and changed direction. That's why the candle is green, it was going up, then the market went lower. So we use this as an order block. Okay. So also here, literally here, we're trading from order block to order block. So you could have taken a trade at this order block to this order block, but targeting these highs, targeting this fair value gap above here. But it may happen that, okay, obviously when I say targeting these highs, some of you will be like, so that means you're going to violate that order block from buying here. But yes, I'm expecting us to violate this order block because we are in a bullish market right now. We are really bullish. So I'd expect buys to be highly probable in this situation. So if you were to take a buy here, I would target this high here because it's an order block entry within a fair value gap, if you get what I mean, because this is a fair value gap. And this 2 red candles were a change in price, so change of direction in price, so there are an order block. Also this, I expect us to violate this area because why? Because we are in a bullish market. So let's go for other examples. This red candle over here, also order block. What am I doing? Sorry guys for that. Is an order block, but in this situation we didn't need to react from it because why? Because we had what? A fair value gap above here. This area, this volume imbalance here is a fair value gap. So in this area is where we turned and we didn't need the order block. But in this situation over here, we turned within the fair value gap, and also keep in mind on the body, literally close to the body of the order block. But we went into the order block, in other words. That's what I'm trying to say. We reacted off the order block. So let's look for more examples. Here's another situation of an order block. this candle right here. Not every red candle, keep this in mind, is an order block. It's change in price. So what I mean by change in price, the market range. Then there's green candles right here. So if the market had gone lower, would use these two green candles as an order block to go lower. But in this situation, I'm showing you because the market reacted off here and went higher. Because if you look at this, sorry for that. If you look at this like this order block, we reacted on it so many times, this. And keep in mind, remember I was talking about the mean threshold? Right here, we did not break the mean threshold in this area. Would you look at that? Where's the 50% mark? Right there. Yeah. So, the mean threshold. Look, we touched the mean threshold. And if you look at it deeper, in a deeper picture, right here, look at this. There's a fair value gap by the mean threshold of the order block. And that's not a coincidence. That's a confluence. What retailers usually say, there's a confluence at that area. This is a good confluence because right here, we have two reasons to buy. The 50% mark of the order block and also there's a fair value gap in that area that we reacted from 1, 2, 3. So this was a powerful area, and this happened last week Thursday. This order block was created last week Thursday during lunch. So this was created during lunch, which was something good, because if we react off an order block that was created during lunch and it goes up really high, that tells you that below there were runaway gaps that were really powerful and we did not feel, which is good for us. But anyway, guys, I repeat again. The reason why this is an order block, this red one, because price did not go lower from here. Yes, these two can be used as an order block. These two green candles over here, you see them here. These two green candles over here can be used as an order block. But in this situation, we are using this red candle because there were two green candles and a red candle, a change in price. Because after this red candle, look what happens. Green candles going up. That's why this red candle is an order block. So a candle becomes an order block when there's a change in the direction of price. Meaning, in this situation again, the two red candles going down, but a green candle comes up and price goes higher. This is an order block. These two red candles together. This red candle alone is one order block. These two red candles together is one order block. This area right here also is an order block because there's an area, it's a change in direction a bit, then boom, up. So I hope you understand that. And this area really was good because there was two things that influenced us to buy. It was the order block and the 50% mark of the order block right here, yes, and the fair value gap right here in this area, you see. So yeah, and it's powerful because look what it did. Boom. Okay, so let me look for another example, because here there's no order block, there's fair value gaps. Actually no, I'm wrong. Look at this. This is what I'm speaking about. So right, CPI, boom, price goes up. I'm focused on this area right here because I want to mark a 3 candle order block. This 3 candle order block right here, look at it, how great. This 3 candle order block, we reacted off this 3 candle order block, and again, look what is within the order block, a fair value gap. So in this area, it's a powerful sell because of what? Because we had two things confirming the sell. And as you can see here, the sell was confirmed. We went to lower prices, lower, and here we ranged. After we ranged, we used the other order block to go up and break this high. But what I'm trying to get to you is this area here, this order block, this 3 candle order block was used. You see right here, this 3 candle order block was used for sells, and this 1 candle order block was used for buys. So let's look for another situation. And reason again, I'll repeat the reason. These 3 candles right here represent a change. Like it was going up and a red candle came out, so there was a change in direction. I think this was PPI, yes, but these 3 candles represent an order block. Let's look for more situations. This really won't be a long video because introducing order blocks is not something difficult, it's something really easy for you to understand what's an order block. These 3 candles here are one order block because why? Market went up, here it exhausted. As it exhausted, here it took a break and change in direction, boom, market goes up. These 3 candles are an order block. Let's mark them. It's really not something that difficult, guys. I've just really simplified order blocks for you. Right here, market goes down, up again a bit, then goes boom, lower. You see? But in this area, then you see, I'm sure we used a lower time frame order block. Here I'm just doing it on the 15 minutes because I know I'm gonna find a lot. Right here, here's the ones I love. This was probably, yes, news influx. I love when news are involved or when New York opens, because look at this perfect order block, a perfect entry, a perfect buy. See these type of buys, I love these type of buys, because besides my favorite is the order block, then you find a fair value gap within the order block. Those are my best ones because I know how to minimize like the stop loss, to take the minimum loss. So in this area, boom, market goes up. Here's the first order block, here's the second order block. But in this situation, look at this right here. Should I include this? But okay, let me just include it a bit. I'm gonna end this video after this. You see this part, this high right here. Look at the next candle. It fills it immediately. Immediate rebalancing of price, meaning we are going higher. So after this immediate rebalancing of price, where was I? Right here. Right here. We went up, up. And the order block after the immediate rebalancing of price is important because we'll always return to it and bounce off it. And you might think, but you said, no, remember carefully what I said. As long as the candle does not close past the 50% mark, we are good. The wick doesn't mean anything. Wicks don't really mean anything. They just take liquidity, and look where the candle actually closed, and the next one moved up. Boom, we were up here. Yeah, simple as that. So I hope you learned a lot in this video. Just a quick Nyana video, 18 minutes. It's been 18 minutes, but it's a powerful video. Yeah, I know. So guys, don't forget to like, share, and subscribe. Yeah, and get ready for the next one. The next video is about psychology, I think. Yeah, I'll look at my video plan, but I think the next one is about psychology. Yeah, guys, keep it going.
Woke up like this, I'm going big. She gave me a kiss. Mwah. That nigga sick, I'm going big. I am a king. Yeah, nigga, I'm in. They couldn't trust all the kids cause I fit. Kicking your shins, I got no time for no quit. T63 in the mill, now that's the deal. I'm getting bigger and bigger, I mean. Little by little, I'm making a scene.